How does a man lose $20 billion in just 2 days, and no one sees it coming? Not a bank, not a corporation. One man. No headlines, no attention. Quiet wealth building behind the scenes. Then, without warning, came the biggest personal financial collapse in modern history. His name? Bill Hwang, a devout Christian, a former Wall Street star, a man once banned from trading for insider activity, who somehow returned, built a secret empire called Archegos Capital, and convinced some of the world's biggest banks to hand him billions. And when it all came crashing down, he didn't just lose money. He nearly dragged global markets down with him. This isn't a story about a bad trade. It's about unchecked power, silent risk, and how Wall Street was blindsided by someone it thought it had already buried. So, who is Bill Hwang? And how did he fool them all? Bill Hwang didn't look like the next Wall Street time bomb. He was low profile, calm, polite, a Korean-American son of a pastor, deeply religious, often quoting scripture and leading prayer meetings with his employees. But behind the modest appearance was a razor-sharp mind trained on money. He started his career at Tiger Management, one of the most elite hedge funds in history. Under Julian Robertson, Hwang learned the language of big trades and bold bets. He eventually spun off his own fund, Tiger Asia, which grew rapidly, then crashed just as fast. In 2012, Hwang pleaded guilty to insider trading. He was fined, banned from managing public money, and most assumed his career was over. But it wasn't. He quietly rebranded as a family office, a private investment firm using only his own money. He named it Archegos Capital. No outside investors, no press, no oversight. And yet, by 2021, he had quietly built it into a financial powerhouse, managing tens of billions, using exotic strategies that flew under the radar. Bill Hwang wasn't just back. He was bigger, bolder, and far more dangerous than anyone realized. Archegos Capital wasn't a traditional fund. It was a ghost. No clients, no required disclosures. No one is watching. That gave Bill Hwang freedom, and he used it to build a high-risk empire behind the scenes. Instead of buying stocks outright, he used something called total return swaps. These financial instruments allowed him to bet on stocks without actually owning them. The shares stayed on the books of the banks that lent him money, hiding his positions from the market. It was leverage on top of leverage. Hwang used this to quietly build massive stakes in a handful of companies like Viacom CBS, Discovery, and GSX Takedo. In some cases, he held over 10% of a company without anyone knowing. Because the swaps didn't require public filings, Wall Street couldn't see the full picture. Even the banks didn't know how exposed he was across institutions. They just saw a client making aggressive bets and paying on time, so they kept lending. More banks, more leverage, more risk. And as long as stock prices kept rising, it worked. Bill Hwang had found the perfect loophole, a way to multiply billions with almost no one asking questions. Until the game broke. It only took one bad week to destroy everything. In March 2021, shares of Viacom CBS, one of Archegos' biggest bets, started to fall. The stock had been climbing fast, possibly inflated by Hwang's aggressive buying. But suddenly, it dropped. That triggered a margin call. Banks that had lent Hwang billions wanted more collateral. Archegos couldn't provide it. The positions were too big, too overleveraged. And once one bank started selling, the rest followed. Credit Suisse, Nomura, Goldman Sachs, Morgan Stanley, all dumped massive blocks of stock to protect themselves. It was a fire sale, and it set off a death spiral. The value of Archegos' positions collapsed within hours. $20 billion in exposure evaporated. Banks lost over $10 billion. Entire balance sheets were shredded in a weekend. And Bill Hwang? He didn't speak. He didn't panic. He vanished from view. The man who built his fortune on silence and secrecy had taken one risk too many and brought down part of Wall Street with him. It wasn't just a collapse. It was one of the fastest and most devastating financial implosions in history. And no one saw it coming, not even the banks he owed. The collapse of Archegos was a financial earthquake. Credit Suisse alone lost over $5 billion. Nomura reported billions in damage. Other banks, though quicker to act, still took hits. Investors around the world watched in disbelief as big institutions revealed just how blind they had been. All because of one man. There were no criminal charges at first. No dramatic arrest. Bill Hwang simply disappeared from the spotlight. His silence spoke louder than any headline. But questions kept mounting. How did a man with a history of insider trading convince major banks to give him that much leverage? Why did no one ask what he was doing with the money? And most importantly, could it happen again? Eventually, U.S. authorities opened investigations. Testimonies began. Hwang was indicted in 2022, but he still walks free while legal battles play out. His empire collapsed, but the system that enabled it still stands. Bill Hwang lost $20 billion in 2 days. But this isn't just a story of money. It's a warning. Because what Hwang exposed wasn't just a personal failure. It was a system-wide blind spot. A world where reputation replaces oversight. Where risk hides in shadows. Where a single trader can shake global finance without anyone noticing until it's too late. The banks moved on. The markets bounced back. But the question still lingers. What if the next Bill Hwang is already out there? If stories like this open your eyes, like, subscribe, and stick around. The truth behind the money is never simple.